Types of individual stocks and index fund stocks. Types of individual stocks and index fund stocks. Individual stocks are shares of ownership in a specific company. Types of individual stocks. Blue chip stocks, large, well-established companies with a history of stable earnings and dividends. Growth stocks, companies that are expected to grow at a faster rate than the overall market due to factors such as technological innovation, new product development, or expansion into new markets. Value stocks, companies that are undervalued by the market based on factors such as low price-to-earnings ratios or high dividend yields. Cyclical stocks, companies whose performance is closely tied to the business cycle, such as those in the automotive, construction, or manufacturing industries. Dividend stocks, companies that pay a regular dividend to their shareholders, often considered more stable and attractive to income-seeking investors. Penny stocks, low-priced stocks with a high degree of risk, often associated with small companies or speculative ventures. Defensive stocks, companies that tend to perform well during economic downturns, such as utilities or consumer staples. Speculative stocks, companies with a high degree of risk due to their business model or unproven technologies. Foreign stocks, stocks of companies based in other countries, often representing emerging markets or global industries. Preferred stocks, stocks that have a fixed dividend rate and are prioritized over common stocks in terms of receiving dividends or assets in the event of bankruptcy. Small cap stocks, stocks of companies with smaller market capitalizations, often considered higher risk but with the potential for higher returns. Large cap stocks, stocks of companies with larger market capitalizations, often considered more stable and reliable investments. Sectors of individual stocks. Consumer services, companies involved in the provision of consumer services, such as hospitality, entertainment, and travel. Basic materials, companies involved in the extraction and production of raw materials, such as mining and agriculture. Healthcare equipment and services, companies involved in the provision of medical equipment and services, such as diagnostics and hospital management. Industrial goods and services, companies involved in the provision of industrial goods and services, such as machinery and engineering. Technology, companies involved in the development and manufacture of technology products and services, such as software, hardware, and semiconductors. Healthcare, companies involved in the development and delivery of healthcare products and services, such as pharmaceuticals, medical devices, and hospitals. Financials, companies involved in the management of money, such as banks, insurance companies, and asset management firms. Energy, companies involved in the production and distribution of energy, such as oil and gas exploration and production companies, and utilities. Real estate, companies involved in the ownership, management, and development of real estate, such as REITs or real estate developers. Telecommunications, companies involved in the provision of communication services, such as phone, internet, and television. Utilities, companies involved in the production and distribution of essential services such as electricity, water, and natural gas. Transportation, companies involved in the transportation of people or goods, such as airlines, shipping, and logistics. While index funds are a type of mutual fund that tracks a particular market index, such as the S&P 500. Types of index fund stocks. Broad market index funds, funds that track the performance of a broad market index, such as the S&P 500 or the Wilshire 5000. Sector index funds, funds that track the performance of a specific sector of the market, such as the technology sector or the healthcare sector. International index funds, funds that track the performance of stock markets in other countries or regions, such as Europe or Asia. Bond index funds, funds that track the performance of a bond index, such as the Bloomberg Barclays Aggregate Bond Index. Commodity index funds, funds that track the performance of commodity prices, such as gold or oil. Inverse index funds, funds that seek to profit from the decline of a particular index, often used for hedging purposes. Multi-factor index funds, funds that use a combination of factors, such as value, momentum, and quality, to select stocks for the index. Smart beta index funds, funds that use a rules-based approach to create an index, often based on factors such as low volatility or high dividend yields. Environmental, social, and governance (ESG) index funds, funds that invest in companies that meet certain environmental, social, and governance criteria, such as reducing carbon emissions or promoting board diversity. Sectors of index fund stocks. Healthcare, companies involved in the development and delivery of healthcare products and services, such as pharmaceuticals, medical devices, and hospitals. Energy, companies involved in the production and distribution of energy, such as oil and gas exploration and production companies, and utilities. Consumer staples, companies that produce goods and services that are considered essential, such as food, beverages, and household products. Financials, companies involved in the management of money, such as banks, insurance companies, and asset management firms. Again, this is not an exhaustive list, but rather a sampling of the many different types and sectors of individual stocks and index fund stocks that are available for investors to choose from. Communication services, companies involved in the provision of communication services, such as phone, internet, and television. Information technology, companies involved in the development and distribution of technology products and services, such as software, hardware, and semiconductors. Materials, companies involved in the production and distribution of raw materials, such as metals, chemicals, and forestry products. Real estate, companies involved in the ownership, management, and development of real estate, such as rights or real estate developers. As with the previous list, this is not an exhaustive list, but rather a sampling of the many types and sectors of individual stocks and index fund stocks that are available for investors to choose from. Consumer discretionary, companies that produce goods and services that are not considered essential, such as retail, automobiles, and leisure. Consumer staples, companies that produce goods and services that are considered essential, such as food, beverages, and household products. Industrials, companies involved in the manufacture and distribution of industrial products, such as machinery, aerospace, and defense. Materials, companies involved in the production and distribution of raw materials, such as metals, chemicals, and forestry products. These are just a few examples, and there are many other types and sectors of individual stocks and index fund stocks that investors can choose from based on their investment goals and risk tolerance. When you invest in individual stocks, you are betting on the success of a particular company. The value of your investment will rise or fall depending on how well the company performs. This can lead to greater returns if the company performs well, but also greater risk if the company performs poorly. On the other hand, when you invest in an index fund, you are buying a diversified portfolio of stocks that tracks a specific market index. This provides exposure to a broad range of companies and helps spread out risk. The value of your investment will rise or fall along with the overall performance of the market index the fund tracks. In general, investing in individual stocks can be riskier but also potentially more rewarding, while investing in index funds can be more stable and less risky. It's important to consider your own risk tolerance, investment goals, and level of knowledge and experience when deciding which approach to take.